Yo, good morning and welcome to the Morning Market Report. Welcome to October 1st. Pumptober is here. Welcome to government shutdown. Welcome to some horrible private sector job numbers day. And we also just got some manufacturing data just came out. We're going to be breaking it all down. What does this mean for the markets? Bitcoin pumping, as the thumbnail shows, Bitcoin, the rising sun in a government shutdown today, and gold breaking $3,900, silver sitting just over 37, almost 30, 48, 47, almost $48, guys. We got a lot to break down today. We're going to get into it. Get you guys some knowledge because knowledge is profit. You guys know what time it is. Take your seats, get your notebooks out, and let's do it. See you on the other side. Class is in session. Good morning, everyone, and welcome to the Morning Market Report. I am Army Piper. This is the Piper Academy Network, and that's Chart Prime, giving us some good bounce levels yesterday. Guys, job numbers and government shutdown is here. It's Uptober. We are seeing the effects of it on 1 October today, officially Uptober, and we've got a nice update. We're getting a good pump right now, too. Let's go ahead and get my co-host up here so we can get into all of this. OC guy, what's up, bro? How you doing, man? Is your government open? Is Mexico shut down right now? Because we are. So
Oh, what a joke. Yeah, they're open. I mean, they're doing nothing, but they're technically open.
nice. Well, I guess sometimes that it's the best way if the government just doesn't touch anything. You see what happens when our government shuts down here. It means there's nothing that can come out against crypto. And so it's moving today. I want to go ahead and jump over to the Bitcoin chart. Bitcoin chart. Let's take a look at that, and then we'll come back and jump in on this news because I got to get into some manufacturing data that just came out. I'm going to kick it over to you, though, OC. Let's see what you got on that chart, bro.
All right, so let's go for this. We have a stop loss yesterday night. I was looking for a little shorty here. Remember that I was telling you that, well, we didn't have that strength on the bullishness. Nonetheless, at any point, we could start seeing that curl up. And something that I didn't like, it was the money flow. It was a little bit slow, the money flow, but still on the green. So we had a chance to actually break through. So that's why we went for a fourth of a position in here. But, well, there we go, a fourth of a position. And well, what happens? It burst right as we were talking about the very first day right here. That was yesterday, right? So sorry, yeah, yesterday morning. And then yesterday night, we open up a shorting here just to counteract the rejection of this trend line. So it is what it is right now. We are basically out of that trade. We're waiting for a retracement. It's not about the breakout. Remember, it's about the retest. So we're going to be looking for that retest, a continuation, as long as we are above this zero line and, of course, above the dynamic reactor. So far, so good. It seems like we keep pushing. The next target is going to be previous highs. So let's bring up our support and resistance and predictive ranges. Support resistance, where are you? Here we go. And as you can see, we're getting closer to an area of resistance right here at the previous highs, right? So next target to look at is going to be 117,800, and that's going to be an area for a possible rejection. But other than that, well, it seems like the government shuts down and Bitcoin actually flies. That's pretty unexpected. But other than that, let's zoom out. Let's go to the daily really quickly. And right here, we see that we are still within the same downwards ranging here. Let me clean this up a little bit out of my indicators. And well, we're above the dynamic reactor. And let's go for a trend line here. As you can see, this one, this high, this low, we are breaking all of the trend lines, or almost all of the trend lines. Another one that we are holding, it is the entry zone or the rejection zone here. As you can see, rejection, rejection. So as we are expecting, we're getting into a rejection zone. We haven't been able to break out of that zero line on the daily, but still, we'll see how that goes. And we're going to be keeping an eye on the 4 hours rejection zone as we get into the 117,800 for a good measure. And then we're going to come back and reassess the retracement. But other than that, just chilling. looking for the next retracement and continuation upwards.
Awesome. Yeah, we're getting some news right now. It looks like House Speaker Johnson is talking about the government shutdown. I'm gonna listen in on that a little bit in the background here. But yeah, we're gonna go ahead and jump over. Let's go check out the news real fast. I want to get in on that because I got a lot of data over there that we got to get into. Let's go to the news. There we go. All the news is fit to be news. Is that it? Yep, that's the one. All right. So taking a look here at the metrics, guys. Right now, we're sitting currently at just over $4 trillion on the crypto market cap. Trend on this is at 4.43 trillion. That would be the median that the average run of crypto market cap total, and we're currently undervalued at 9.76% right now. Looking at Bitcoin, guys, you guys can see right now we're sitting at about $117,000 Bitcoin, 117,200 range. Guys, look at the risk bubbles, 51.7. This is a 2x. We are 0.018 points away from being a 3x DCA off of that little pullback. I think that we've got quite a bit higher to go in this cycle. Guys, I'm looking at $167,000 for the cycle. That's my target goal. We'll see. But right now, we are seeing that dominance is starting to get another little pump up here again. 58.27% with stable coins included in that Bitcoin dominance. Take them away, we're almost to 63% again. Bitcoin dominance making a little return establishment there. How about this altcoin season index? How are we looking on that? We're sitting at 68.89. It's currently neither Bitcoin nor altcoin season. Remember, 75 is a sweet spot, and we did not stay there very long when we hit it. Pulled right back down, and it is now dropping away from being altcoin season. So looking at liquidations for the past 24 hours, a lot. That's how much. A lot. The past 24 hours, 163,547 traders got liquidated. Total liquidations came in at $623.32 million. Largest single liquidation order happened on Binance. It was Bitcoin. Look at that, OC. I told you, stop trading like a degen. You lost $26.19 million on a single Bitcoin trade, bro. Got it. We got to work on that. Got to work. Those are rookie numbers.
I gotta pump those numbers up. Those are rookie numbers in this racket.
Absolutely. Government shutdown, live updates. Let's give this a refresh, see what it's saying here. We are getting, like I said, Speaker Johnson right now talking about it. The longer this goes on, the more pain will be inflicted. I'm thinking Bitcoin saying the longer this goes on, the more I will pump Bitcoin bags. That's what it's saying right now. So government shutdown, live updates, GOP leaders holding presser before the Senate vote. Will we get out of that? Out of that shutdown on that vote, we'll see. United States government shutdown early Wednesday morning, setting the stage for the furlough of hundreds of thousands of federal workers and the shuttering of a slew of key programs and services. Here's what to know. The full shutdown began after top Democrats and Republicans, including President Donald Trump, failed to agree on a short-term deal to keep the government funded. Democrats, led by Senator Chuck Schumer and Republican Hakeem Jeffries, demand that any stopgap funding measures include an extension of the enhanced Obama tax credits. That's what we talked about yesterday. Trump suggested Tuesday that his administration could take major action during the shutdown, including cutting government benefits for large numbers of people. That would be me. Guess I'm back to full-time trading, OC. No benefits, no bennies from the government. The Senate adjourned after last-ditch votes on Republican and Democratic funding proposals. Both failed to pass, and that was as of 60 minutes ago. The Federal Trade Commission said it will be closed during the shutdown and preventing consumers from reporting fraud. The FTC is closed due to a lapse in funding, and then the closure means we won't be able to answer your questions on X. Consumers cannot report fraud. If you guys don't know this, it's actually illegal. You can get in trouble for working as a federal employee without pay. So, yeah, there is none of that going on. Unless you're in the military, then you can work without pay. The Senate rejected those last-ditch measures on Tuesday evening to keep the government funded through November 20th. Guys, I want you to remember this. This whole thing going on right now only carries us through to November 20th. After that, we have this whole thing again. So even if they decide on something today, doesn't mean that we're not going to go and turn around and have a whole nother round of this again in November. Keep that in mind. This only goes through to November 20th. So You guys know what's going on with that. We'll keep an eye on it. Make sure that we know what's going on. Here's the thing from Kabisi letter on this. I got a lot of X marks the spot today. Let me go to bookmarks. There we go. And let's go see this. Key economic data that is suspended during the government shutdown. Jobless claims from the Labor Department. Okay. Non-farm payrolls from the Bureau of Labor Statistics. Consumer price index and producer price index that comes from the Bureau of Labor Statistics. It's also going to be not going out. Retail sales, factory orders, housing starts, trade data, all of that. Employment trends index from the Conference Board. The GDP data. The new home sales and construction permits from the Census Bureau, export and import trade data from the Census and Commerce, and then the next Fed meeting is 4 weeks away, and we're entering a data freeze where all of this data is what they look at, and we may not get it all. Looking right now at the Bitcoin index, fear and greed, 49. We're at neutral right now. So, yeah, no fear, no greed. It's status quo. Just keep buying your DCA every week. That's what it means. Ethereum sitting at 46 right now, also in neutral. Did you guys see this yesterday? I don't know if you saw this, OC, but this was the Sec of War did a speech yesterday, and it's pretty interesting.
Preventing women from serving. We very much value the impact of female troops. Our female officers and NCOs are the absolute best in the world. But when it comes to any job that requires physical power to perform in combat, those physical standards must be high and gender neutral. If women can make it, excellent. If not, it is what it is. If that means no women qualify for some combat jobs, so be it. That is not the intent, but it could be the result, so be it. It will also mean that weak men won't qualify because we're not playing games. This is combat. This is life or death. As we all know, this is you versus an enemy hell-bent on killing you. To be an effective, lethal fighting force, you must trust that the warrior alongside you in battle is capable, truly physically capable of doing what is necessary under fire. You know this is the only standard you would want for your kids and for your grandkids.
So, yeah, the funny one that he said yesterday, which is not in this clip, is he said, I don't want to be looking at them over the ranks and seeing fat people. No more fat people in the formation. So pretty interesting comment there from him. But, yeah, if you guys haven't seen that whole speech, you should go check it out. It was pretty interesting to hear. So that's the new Secretary of War right there. Guys, good Lord. All right, let's keep going here. We got guys, yeah, this is another one too. I thought this was pretty interesting. I threw it in here just because of the impact of what he is actually saying here. He said, guy who thinks government is pointless, but who simultaneously thinks property rights are important. It matters. It matters. So Bitcoin just closed a September green. That has happened 6 times in Bitcoin's history. Every time Bitcoin has closed September green, it has gone on to gain an average of 51% in Q4. OC, go ahead and get that measurement up because we're going to take a look at that. 51% in Q4. I'd like to see that, please. What would that put us at? It'd be interesting to see. There you go. Digital Asset News putting out a little cuteness for you. Drop some gypsy emojis in the chat. It's okay. Q4 is here. And Peter sums it up nicely. 61 days. That is the magic number. So how long could this shutdown last? I don't think it's going to be this long, but this is a very interesting comment that he makes here. It's a little bit long, but I want you guys to hear what he says here. I'm going to speed it forward a little bit.
Congratulations, America, are now cut off. If you're just tuning in, the federal budget is voted 1 year at a time, and it ran out at grinding. That includes so-called mandatory spending like Social Security, Medicare, and Medicaid, as well as essential functions like the military, air traffic, courts, and the Department of Justice. The Federal Reserve sadly keeps going since it literally prints its budget in the basement. Now, historically, politicians fear shutdown since our rogue federal oligarchy tries to make them as painful as possible, so rather than cutting, say, welfare to illegals, or gender transitions for federal prisoners, they cut school lunches, firefighters, and shutter voters want and toss the rest. Raising the rate because shuttering a third of the federal government would instantly balance the budget. It would lay off roughly 740,000 federal workers.
I think this is the part.
government would instantly balance the budget it would lay off,
Right
shutdown
there.
could actually be popular, in which case it could go on for a long time. Now that's fun.
Of course you're going to load on me. Play, bro. It ain't going to, because X likes to do that thing. Anyway, what he says here, 61 days is the magic number where Trump can permanently fire 740,000 federal workers, saving hundreds of billions of dollars. This could be a target to watch, guys. 61 days shutdown. That would be stupid and insane to see, but this would be the sweet spot. We talk about max pain all the time, right? We talk about this max pain. Here's your max pain for your shorts and your longs, right? This would be the max pain level that he's watching for Donald Trump's biggest benefits out of this government shutdown. 61 days. I don't know. Let me know in the chat, guys. Do you think we would ever see a 61-day shutdown in the government with the current things going on? Who knows? Who knows? I've seen stranger things happen in the past year. That's for sure. What else do we have in X marks the spot today? Quarter four. I love it. I love that picture. The facts the media won't cover. Here we go. Talking about those days. The average length of a shutdown is only 8 days. I talked about this yesterday when I talked about this would take us out to next Tuesday. And what happens next Tuesday, if you don't remember, I'll refresh your mind. It's the new moon, the bullish moon, which we typically pump on except for one time out of like the past 7. 8 days is the average shutdown. The S&P has ended higher 1 year after a shutdown in 86% of the case. S&P 500 posts an average gain of 13% 1 year after the shutdown ends. During the 35-day shutdown in 2018, the S&P rallied 11%. And while the government is shut down, the U.S. defers $400 million a day in cost. The federal government turns more dovish if government data releases are paused. So the FOMC likely would be dovish if we go on too long. And then historically, the market actually welcomes shutdowns. And we talked about this, that we normally see a move to the upside. This time, though, we do have the fear factor of the loss of jobs being permanently cut from the federal government. Not a bad thing, in my opinion. I think the government's way too freaking big, but it would be something that just adds to the pain that we're seeing on the employment numbers. Let's go look at the markets right now, how they're looking. Bitcoin right now up 3.5% on the daily. Ethereum up 3.9%. Bitcoin's at 117,235, and Ethereum at $4,300. XRP's flat on the hourly, but still up 3.7%. What big movers do we have? We got Solana up 5.8%, not given an F today. No F's given. That's what's going on with Solana there. Dogecoin's up 6.5% today. Cardano, ADA is up 6% today. Hyperliquid up 6.8. SWI is up 6.9. Stellar Lumen's up 6.7. And I would love to say that this move today that we have with Bitcoin is because Bitcoin's narrative of being digital gold is taking a hold, but we're seeing an actual strong movement across the board on a lot of the altcoins today also. How is the stock market looking right now? Let's refresh this and get this data in here. Shout out to Jay Violet, Crypto Squid, Alexander G, All Set, JR, Harp. I see you guys all in here chatting away. I appreciate DDT. I see you too, bro. Looking here at the current market conditions, Dow Jones pretty flat right now, up about 0.03. These were down much, much lower this morning on the pre-market, guys. S&P down about 0.2%, 1.17. NASDAQ about 0.2% also. Russell 2K down about 0.3. There's a volatility index. I said we would see a lot of volatility if the government shuts down, just in general, because people are confused. They don't know what to do. A lot of unknowns there, right? So 16.46 points right now to the upside, almost at that 17, which is the sweet spot for max volatility in the market. So let's go take a look at the bonds. 10-year yield dropping today, 4.115. It was down a little bit lower this morning, but people are buying at the treasury yields right now. That's why it's going down. If it's being sold, it goes up. They need a higher interest rate to entice buyers. If it's going down, it's being bought up. And so they lower the incentive rate, right? So we're seeing bonds being bought up today. How about gold, guys? This thing was over $3,900 this morning. It's at $3,898 right now, continuing to pump, hitting some key levels that I want to show you guys on the chart. Things that we've shown you on trend-based fib extensions. Silver is almost at $48 right now, up 2.62 today. Copper selling off, platinum selling off, palladium selling off, and that's what we have there. Let's go over into. Yeah, we'll come back to that. We'll come back to that. Let's go talk about this data. So this morning we got ADP employment change. Now there's some key things on this that I want to show you guys. This thing, it says negative 3K. Folks, last month this was actually positive 54,000. Positive 54,000. Until this morning, this said 54K, and they were expecting this to be 50K to 40K. They revised it down to negative 3,000 jobs in the private sector. And then the report came out this morning, 32,000 negative today. What is this ADP? What does it mean? It's private. This is your private employment. This is why we got this data. And why this is, look, I want to show something. When you guys are looking at this, I was telling Alex O this morning, he typically looks at this. This is your most important stuff, 3-star impact. Sometimes you got to put this on 2-star though, so that you get this other data in here, like ISM manufacturing employment or ADP employment. Why? Because important today over most days, this private employment may be the only job data that we get before the FOMC. Keep that in mind. If it goes on long enough, this could be the only job data that comes out. How did this look today? Negative 32,000 jobs for September. Private employers shed 32,000 jobs in September. ADP conducted its annual preliminary re-benchmark of the National Employment Report in September based on the full year of 2024 results of the quarterly census, blah, 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 blah. Despite the strong economic growth we saw in the second quarter, this month's release further validates that what we've been seeing in the labor market. U.S. employers have been cautious with hiring. No, they've been firing and laying off. That's what's going on. Look here, but this is the sad truth to it. You guys see where the positive job numbers are at? Large companies, 500 plus. Look at the small companies, 1 to 19 employees, down 19,000. 20 to 49 employees, down 21,000. 50 to 249 employees, down 11,000. 250 to 500, 499, down 9,000. This is your small business. This is your backbone of America right here when it comes to the economy. And we're seeing that small businesses cannot make it right now. They're doing massive cutbacks because things are just so expensive for them. They don't have the ability to buy wholesale and bypass a bunch of 20% tariff, but I get a 10% discount if I buy 1 million of this product and spread it out to all my stores. So we're seeing that the small business is carrying all the weight of this job loss right now. You can also see natural resources and mining that had some growth of jobs. Construction down 5,000, manufacturing down 2,000, trade, transportation, and utilities was down to 7,000. Information, guys, AI, the information sector, data centers, stuff like that, IT up 3,000. Financial activities down 9. Professional and business services down 13,000. Education and health services, evidently that's important right now. It's up 33,000. Leisure and hospitality, though, eating over half of it, down 19,000, and other services down 13,000. That's your ADP jobs today, and not looking too good there, especially after they revised from 54,000 back here in for last month, the previous month. This would have been August. They revised it from 54,000 down to 3,000. They've essentially just erased 57,000 jobs out of the private sector for a month. ISM manufacturing also came in this morning, was at 48.7, expected to be 49, came in at 49.1. No big surprises there, came in pretty flat. ISM manufacturing, though, I'm curious about this. ISM manufacturing employment was at 43.8, forecasted to be 44, came in at 45.3. Guys, we come back over here and we look at manufacturing, it was down 2,000. So where's the disconnect on this data to what we're seeing in the private sector? Pretty interesting twist of numbers there. So keep in mind, we do have initial jobless claims that's supposed to come out tomorrow. And then we have non-farm payrolls and unemployment supposed to come out on Friday. If we do not have a government reopen, we will not see this data, making this ADP employment data that we got today the most important job information that we could be getting again before the FOMC. Yeah, small businesses getting absolutely wrecked, DDT. What about the chance of rate cuts now? Guys, remember how it was starting to creep up that might not be a rate cut? Look what ADP did today. We now have a 99% chance of a 25 basis point rate cut, 100% chance that we get a rate cut. No percentage, 0% chance that we get a rate pause. We're now actually seeing a 1%, that little teeny tiny number over there without cutting off my finger. That 1%, here I can do it like this. That number right there, 1% chance that we get 50 basis point rate cut this month. And I don't think that would be good. Why? Because that would scream emergency, danger, Will Robinson. So keep all that in mind, guys. Overall, as we said earlier, when we have these moves like this of quarter 3, this is from Crown Crypto. Where'd he go? Come here, Crown. Where you at, Eric Crown? Right there, Crown Crypto. He said, 51%. I'd like to know, OC, a couple things. One, what do you think of these ADP job numbers? They're horrific, in my opinion. Small businesses dying on the vine. But answer that, and then let's go take a look at that Bitcoin chart. What does that percentage to the upside, that 51% in quarter 4 look like for Bitcoin's price? Your thoughts, though, on these job numbers that we got today, and the fact that it might be the only job numbers we get this entire month before we go into the rate cut season.
So 2 things came to my mind really quickly. First, the horrible part of losing jobs that this is, right? I mean, this is not good. If you look at the population side, what we are right now standing, which is our side, right? Not politicians. And are we cut? Are we live?
No, we're good.
All right, perfect. So you just stuck on my end. So that means that well, there's a lot of unemployment, right? Not only that, well, all the pressure, as you mentioned, it's being charged to the middle class or the middle productive class. Not only the workers, but also the entrepreneurs. That is not good for development. So, well, more actions will be needed there to fix that. Another one it is that I see a manipulation window here. Revision, maybe something like that. Maybe skipping one. Well, if it's gonna be the only numbers that we're gonna have in here, well, how the next numbers gonna look like, right? Maybe they can have more time to, I don't know, change numbers, things, change narrative, or whatever they might need to do. But yeah, I mean, those are the 2 perspectives that came to my mind at this point. But talking about the markets, I think that this is gonna be quote unquote good for the markets because, well, this will increase the chances of rate cuts because of the job numbers, and well, rate cuts are good for the risky markets. So yeah, I mean, I don't know, it's kind of like a win and lose sentiment, like, yeah, perfect, we're gonna get rate cuts, but at the same time, oof, that numbers are really, really not something that I'd like to see.
Yeah, absolutely. Let's go take a look at this Bitcoin chart. I'm actually going to pull it up. I'm sure you have it on your thing, but I'm going to pull it up here with you. I want to talk about a couple of other levels over here. Just to remind everyone, class refresher, we do still have a CME gap sitting all the way from September 26th, sitting down here at 109,800, top side of 111. So keep that in mind. Still have a CME gap. But I want to take a look here at gold, and then I want to jump over to Bitcoin. Guys, look at gold here. This is trend-based fibs that I pulled from the last time that we had our rally up and pullback. So low to high to low gives us trend-based fibs. Look at these levels that have played out here. First of all, nice bounce in the platinum pocket before the upside move. Came in, broke, almost did a perfect retest there of the golden pocket before coming back up in. And then look where we are right now. I think that we're going to see a little cool off here because we have a little gap right here. There's a nice gap. I think we'll come down to that level, which is about 38.70, 38.75 ballpark, and then get another move to the upside. Of course, we do have a nice little collection area here of volume 2. And if we pull on a fixed range volume profile for this, I know everybody's watching gold right now. You guys, with good reason, I understand. But you need to be aware of some of these levels. There you go. Point of control, 3680. Not saying that we're going to pull back to that level, but we have a lot of support here because there's also a gap there on the daily that, gap down, fill it up, go, right? But right now, perfectly hitting that 2.66. But let's go talk about Bitcoin here. Actually, we'll pull it over here. Just to keep in mind, folks, we are sitting currently inside of our trend-based golden pocket here still, just under that 0.66 level, 117,833. This has been our range that we have been fighting to get out of for a while. Will it happen this time off of that beautiful bounce we had right there on the bull market support band and the daily dynamic reactor? I will say on the 4-hour here, we did get this yesterday, and if you guys missed this, you should have had Chart Prime turned on. As soon as it loads, you'll see here, this was our bottom range before the bounce. We pulled right down to the dynamic reactor from Chart Prime, and then up we went. So shout out to Chart Prime doing some great stuff for us there on the support levels. But let's go talk about a 51% move on Bitcoin. You guys know I do have this here. Where are you at? Market tops, market bottoms, fib cycles. There we go. Let's turn that on there. This is the level that I'm watching here, which is going to be around the 167 to 173. Why? It's going to be our platinum pocket top. It's also going to be our 1.618 on the trend extensions here. And historically, if we turn on all of those, there you go. We typically hit that 1.618, if not go even further. Last cycle only hit the 1.618. So right now, hitting that level, that would be about 167, and then the platinum pocket 786, 173. Let's go throw this on, and let's do a 51% move up from here. We have to do this from the end of yesterday. So let's do that, and then go 51% up. Holy cannoli. OC, holy balls in the chat, guys. Where's it at? 51% in Q4. That's what the historical trend is. Where's it come in at? Right at the 1.618 and the 786, sitting right in between there. So shout out to Crypto Crown, Eric Crown over there, and then also shout out to Alexander G for holy balls. I'm gonna drop some in the chat here. Got to get holy balls in the chat. There we go. Holy balls right in line. Let's go. OC, can we go take a look at what you're seeing on gold right now, bro? I mean, I just talked about some key levels, but the thing won't stop pumping, dude. It just won't stop. And Bitcoin, I've been saying, just keep buying it. Maybe just keep buying gold and silver too, because I will tell you, it's not things are not holding up well out there in the world like we're seeing with Bitcoin and gold. So what do you got for us on the chart, man?
Absolutely. So gold, as we expected, well, on uncertainty, especially on the traditional markets, that brings up gold pumps, right? So far, we're seeing a little pausing here, some rejection at these zones. So I am going to be expecting a little bit of a up-ranging scenario like this, maybe a rising wedge. We need to be a little bit careful here. We might have some retracements, and any retracement at this point, well, look at this trend line, right? It's doing pretty good. So we're going to be looking for that retracement to the trend line for a possible re-entry. So far, we are losing that bullishness, but increasing the strength, which means that we are creating we could be creating a divergence. Let's bring up my oscillator just for good measure, because for some reason, it just run out of RAM. Right, for some reason, trading view. All right, so there we go. We could be having or forming a divergence, a bearish divergence, as we have a lower momentum and we keep pushing upwards. So it's not there yet, but how I see this price action is it would make sense to create that kind of pattern. So we'll keep this for now here. But at this point, well, then, if you're going to be jumping in for gold, I would suggest waiting for those drawback downs. Something to bear in mind, I mean, like this, a 1.7, 1.5% even, that will be a good retracement measurement to actually go and consider jumping in partially. So remember, never push all of your money once. at once and do it gradually. That's why the DCA exists, right? And you want to take advantage of those retracements to actually get on those entries. But yeah, that's what I got on gold. It keeps pumping like there's no tomorrow. And well, then we need look at that. We need a
Maybe gold
retracement
knows
for
something. Maybe there is no tomorrow.
oh man. Yeah, so just looking for a little retracement here. And as we're pumping this hard, well, this is the kind of retracement that we can be expecting, all right? So let's measure that. In this case, because of the zone, a 47% retracement, but right here will be a little bit higher. Well, it didn't. Why? Because we are logarithmic, of course. That would have been, yep, same 4% retracement. But yep, I mean, looking for that. Here it is. Here it is. Here it is. All right, for a 10% retracement. I don't think that we're gonna be seeing this right now. I think that we need to go a little bit higher, and that target will be somewhere around this next predictive ranges, somewhere around 4,200, 40,150. And yeah, that's what I think.
Awesome. And that's what I think about that. OC says, shout out to Dano Crypto. He's in the chat right now. I see you, bro. What's up, man? How you doing? Good old Dano Crypto. We normally push over to him, or we push over to Crypto Coin Mindset. Today, Crypto Coin Mindset's going live, so we'll be heading over there. But guys, follow Dano Crypto and go check him out. He does a lot of continuation of TA. Good data. He normally goes live right after us. So yeah, I kind of alternate between Crypto Coin Mindset and Dano Crypto. Both great information centers to get some news and get some knowledge. Dano Crypto, he likes to dig in on some degen stuff. So if you like the degen stuff that no one else talks about, you might get some info from Dano Crypto that you need. So, OC, we just we're closing in on 117,400 right now with Bitcoin. Altcoins are still getting a move up to the upside. What are you thinking on the alts, man? I mean, Bitcoin dominance is on an uptick right now, but we're seeing that total 3 is up 2.8% today, and total 2 is up 3.33. You watching any alts pretty closely right now that you're doing?
Yeah, absolutely. I'm looking at a couple of those. Let's bring them up. It was a little bit of a bummer. Yesterday, I was looking for a retracement, and we got a stop on a couple of trades. On XRP, we did not make any money on XRP. We moved our stop to the entry, and as Bitcoin start pumping, we also have seen the same thing on XRP. Something that I want to go over, it is Solana. It was not Solana. It was Solana. It was Solana. Let me bring this up. Here it is. And the very first thing that I mentioned 2 days ago, it was this one ranging in here. Then I started seeing this retracement right down here. All right. And I said, you know what? We are between two areas of resistance. They're not there yet anymore, but we had two smart money entries. And I figured that, well, we're going to be ranging for a little bit. Now we have the breakout of that range. Here we got it right here. And we're getting against the quantum reactor. Something important to know about that quantum reactor is still green. We don't have still gray. It is not red for a rejection, and it's not green for a breakout. So it means, hey, hold your horses, because we are in an indecision zone. So far, I'm just gonna be grabbing this thing in here and calling out for a little range, unless Bitcoin keeps pumping like crazy. So far in our oscillators, we are curling back up, gaining some strength, and we are on bouncing zones on our ADX. If we are able to bounce on our ADX to the upside, we're most likely going to have our next run up right here to 231 for the next rejection. So keep your eyes open on Solana. I think it's going to be pumping throughout the day. Let's go and take a look at, for example, Ethereum. So Ethereum Classic is basically inert. It is just making a ranging here, getting at the top of the range, but something important. That's why I'm giving it a look. By the way, shout out to Kelly Caliphant. She was the one bringing this to my attention a couple of the past week, right, when we did some good trading here. Well, we're getting to the resistance, but we are ramping up on our oscillator. Money flow is still red, but once you cross over that zero line, and we're curling up, that might be suggesting that we could be having a breakout retest continuation on these areas. So keep your eyes peeled for the next Ethereum Classic. Remember, we don't long resistances, but once we break out and we get to the next resistance, we short that resistance for a bounce back up. We long that bounce back up, and then off we go for the next upcoming movement. So Ethereum Classic, the good kind of Ethereum. So I also am looking at Litecoin. I was looking for a retracement. I was telling you guys that I was expecting that retracement for then a long position. That long position actually happened earlier. We had the breakout of the trend line. It was a pretty bad breakout, to be honest. Look at that. I mean, it didn't want to actually break out, but at the end of it all, it did push. Something important to note, we are still red on our quantum reactor, so we will need a lot of strength to break to that quantum reactor, in different being very different from Solana. So Solana has much more or much higher chances to run up than, for example, Litecoin and, well, the Ethereum is turned off, and Ethereum Classic. But still, we're keeping an eye on those assets. Another one that I was looking for, it was Hype. We got a stopped out on Hype, so what a bummer. But still, we are below dynamic reactor. I'm gonna keep an eye on our linear regression oscillator. By the way, free indicator by Chart Prime. And that is because we are not having the same strength as we have some other places. So I'm going to be looking back for another shorting here, because so far we're having a flat top here, a possible double top. So I'm going to keep my eyes on Hype once again. So I'm going to add an alert on Hype right here at 48, 478, and another one, of course, at this trend line. Let's lock it first. Let's unlock it first. Let's move it slightly bit below, all right, to give myself that wiggle room. Now let's lock it in place, and finally let's add an alert to it. So that's what I got so far on the coins that I'm looking at. And throughout the day, I'm gonna be looking at BNB, what are the ones, Link, ADA. I want to look into Pingu and maybe AIXBT, but we'll see
All
how
right.
those develop.
You're going to
Day.
look at those before the end of the show then, right?
Yeah, sure.
Cool. Then crypto coin mindset, you're good. We're going to go all the way to your start time at 10 o'clock today. So top of the hour. So we'll be heading over there afterwards. So I was doing some stuff over here. You know, my brain, it's always back here working in the background. I don't even listen to OC half the time when he's talking on the charts because I'm looking at other stuff. I'm sorry, OC. ADD is a real thing. But I'm looking at these job numbers today. And I hate to be, the pie bear. Drop pie bears in the chat. By the way, Melissa, I saw that you came into the class late. It's okay. We'll just make you write knowledge is profit on the board 100 times before you leave class today. All good, Melissa. I was looking at these job numbers here, OC, and I said, hey, let's talk about labor recession, because there's a thing out there, guys, called a labor recession. If you don't know, it's where you don't have a recession, but you have a labor market recession. What does that mean for the markets? Let's talk about that. Labor recession is a situation where the labor market weakens significantly while the broader economy is still expanding. At least it's not in a full-blown recession, right? Here's what it means for markets and economy. Economic meaning slowing job growth, fewer new jobs being created, hiring freezes rise, job openings decline. We're seeing all of that, right? Rising unemployment risk. If weakness persists, unemployment climbs, which can cut into consumer spending, the largest driver of U.S. GDP. See how there's a cause and effect here? Household stress, wage growth slows while inflation may be sticky, reducing the real disposable income. So even people that are making money are actually seeing less money because things are more expensive due to inflation. And then you get a soft versus hard landing. A labor recession can be a warning light that a soft landing, slowing without a crash, may be tipping toward a hard landing, full-on recession. Equities, initially, markets may cheer weaker labor data if they think that it will force Fed rate cuts. We're seeing this happen now. So this is a thing, right? But if job losses accelerate in consumer sectors like retail, housing, leisure, services typically underperform, while defensive sectors, utilities, staples, healthcare outperform. Bonds, labor weakness usually mean bond yields fall as investors expect slower growth and rate cuts, meaning people are buying the bonds as a result. Energy demand may weaken if fewer people are working and production slows, and the crypto risk assets often hit hardest in the later stages as liquidity shrinks and risk appetite falls. Right in time of our fourth quarter pump and then the crypto winter cycle, right? So we're seeing this right now. And I said, are we seeing labor recession right now? And I know the answer. I just wanted to have it on here because we are seeing that bond yields are falling, right? We're seeing that the commodities, that the people are cheering for, rate cuts and the markets are going higher and all that. But in short, a labor recession signals a crack in the job market before the economy fully rolls over. Markets can rally briefly on rate cut hopes, but sustained weakness in the labor market almost always pressures earnings and consumer demand, which drags down risk assets and offset by strong liquidity injections. So job openings stagnating and weakening growth. Evidence in favor that we are now seeing labor recession begin. We had the 7.2 million job openings that were down, about 4.3%, little change month to month there. Slower hirings and fewer quits, soft separations. Hires in August were about 5.1 million, essentially flat. The quit rates declined to negative 1.9, meaning people are, you know what, I don't think I'm going to quit my job right now, may not find another one. Layoff and discharges have not yet spiked, but quits dropping, people slowing down on quitting their job is often an early warning sign. Then we have rising or sticky unemployment and downward revisions. Unemployment has edged up from 4.1 to 4.2 to 4.3 recently. U.S. also revised earlier job creation figures, almost 1 million jobs less. So we are seeing the signs of a labor recession going on right now, but caveats of why it's not definitive yet, operative word there, no dramatic spikes in layoffs yet. Labor force dynamics complicate the picture. Some of the unemployment gains from the people newly entering or re-entering the jobs are not just job losses. They're just coming back to start looking for jobs because, husband or wife that's working, coming home going, this is my check. Still didn't get that pay raise. What's the electric bill? What's the food bill? Holy crap. I heard Alex O this morning say he spent like $600 at the grocery store and he didn't even get that much. That's causing the other spouse to have to start going and getting a job now. So they're entering in, not a job loss, but now entering in on hunting for a job, which makes fewer jobs available across the board. Still moderate unemployment levels. We're at 4.3 right now. It's elevated, but it's not getting extreme yet. Timing and lag effects. Labor stress typically emerges before a full-blown economic recession. So we could be seeing the warning signs. We're in the warning phase rather than the full-blown collapse. What to watch? Jobs data in Piper Academy to get all of your job numbers and report. That's what you watch. That's what you watch, Piper Academy. But guys, we are seeing some of this data, and I'm sitting here looking at this going, there's something here. I can feel it. I can smell it in the water, right? Something's not right in this water, in this Kool-Aid that they're telling us to drink. I can smell there's poison in it. And I do think it's we're starting to see labor recession. Start listening for that word. I guarantee you, we're going to start hearing people say labor recession more and more now that I've said it, because I typically am right ahead of everyone else talking about what I'm talking about. Don't know how that happens. Shut up, TradeFly. Good morning, alumni. Hope everyone is doing well. We're over here dropping pie bears in the chat, TradeFly. That's what we're doing. We're dropping pie bears because Piper dropping doses of reality while Bitcoin pumps. Who knew? OC, let's go take a look at those altcoins you're looking at. But yeah, I just wanted you guys to have that little bit of info there, some warning signs and what it leads to. So right now, though, we're going to lead over to OC's chart and take a look at what alts are doing because they're looking pretty tasty right now. Let's go.
Absolutely. Really quick, well, guys, I just want to do a friendly advice, and this is how I did it. When you're in the transition of trading and you already have a job, now that Piper's talking about that job recession, it is, well, don't kill, or at least not just yet, don't kill your golden egg chicken. Right, I mean, your job right now is what is paying for the bills, is what is pushing, your education for trading, what is making that money for you to put into the trades that you do, right? So do not make the mistake to just say, hey, I'm already okay at trading, and then I just quit my job, because if something shakes out the market, every single cent that you are into a trade is actually not revenue. It's actually part of an investment. So be careful, because if you lose that, you're just actually losing part of your paycheck on the way out. All right. So instead of seeing it as a, you know what, I'm gonna quit my job to do full-time trading, well, then start maybe looking for another job that either pays you more for less work, or if you're already pretty good at trading, start rotating into more trading, and well, then investing less into a job. But always, always, always have a plan B. Be prepared, not scared. All right. So other than that, let's go and check this out. AIXBT. Let's get started with AIXBT. And right here, we are hitting the top once again. This X right here, that maxer spot, it was basically the top. We were expecting a little range at the top for a short. It played out very nicely. Bummer, I did not take that trade. Still, it played out very nicely to the downside. And right here, we are creating a megaphone. So that is pretty important, because on this megaphone, I would say that we have the chance, and this is a pretty wonky megaphone, I would say. We have the chance of a big breakout, right? And a megaphone at the bottom usually tends to indicate that we could be breaking to the upside. Is it going to happen right now? I don't know, but we are right now breaking to that zero line in green. That is pretty fantastic. We are losing strength on the bullishness, but that bullishness keeps rising, and we are getting closer to bouncing zones. So if we are able to do maybe a little bit of a retracement back to the center zone in here, this would be your entry for then hitting it off to the next resistance area. So the next thing I'm going to be doing is getting an alert right here, and another alert slightly above, in case I have either a breakout retest continuation. So I could have this breakout retest continuation, all right, or I could have, in a much better way, a right now retest and then a breakout. This will give me, of course, a much better price action, right, or a much better entry zone. There we go. So we have three alerts: 0.1027, 0.0970, and 0.0916 for AIXBT. Link was one of those trades that I called out yesterday. A quarter of an entry yesterday. We risked. It was a 3/4 of an entry. So one single normal trade divided in three different positions. All right. So it's still a little bit of a bummer. I really hate when this happens, but we were breaking out this trend line, right? We were turning back around. We were losing some strength, but look at that right here. It actually started pumping back up as we were talking about this, right? And it did actually push through to the next resistance. So I'm going to be looking for either a breakout or rejection. I think we're going to have a breakout. I'm looking at this area for then retracement and then continuation. So I'm going to set my alerts. Another alert right here if I start breaking up, and then another alert right here on this trend line, because this is what I call getting in sync with the market. All right. This clearly shows that I had an unsynchronization with the market, right? I mean, up, down, up. All right. So now that you look it back, well, it's pretty obvious. But right here, we had lower highs, lower lows, lower lows, a breakout of the trend line, right? Which turned out to be a fake out, still on the green, a little bit of red trying to break to the downside. So I risk it for a short to get that breakout short instead of waiting for one more candle. And then, well, I need to get back a synchrony. So chasing after the pricing here and this is just a personal way that I handle my losses or my unsynchronization with the market. It's just letting a portion of the market untradeable, right? So for me, it is this part that it took me out. And then maybe the next 1 or 2 candles, I want to have an absolute confirmation on what the market is going to be doing, because this is like, hey, you took one wrong step. Let's take one step backwards, reanalyze, get together, right? Replan, and then come back with more strength. So that's what I'm doing here, building up with myself trust in the next area of the market. And I've been telling you, I just don't trust the markets at this point. And well, this is the one that I'm looking at, Link, and I think Link is going to perform pretty good. ADA, a little bit of more of this. Since Link is going to perform good, I think ADA is going to follow along. And if you take a look at here, it is basically the same structure, but without the fake out here, right? We have the base, 1, 2 hits, and then pump. We have the base, 1, 2 hits, and then the pump. So that means that right here, we're heading higher, maybe looking for that peak performance diamond, and then the next reversal in ADX, then flip of the rebound for a short. But in the meantime, I think I can hunt a little long right here. We'll have to see how that goes. So for that, I'm gonna get an alert right here that is telling me, hey, you know what? I'm hitting the top. All right. I'm not gonna be trading this zone, just so you know. All right. And then I come back to the charts to reanalyze your support. This is my support, 0.82, and then a continuation upwards. And if you can take a look at it here, we not only have our predictive range, so we also have our quantum reactor. And if I add support and resistances, there we go. I know I am a little bit below on that support, still a little bit higher where I should be aiming for. So let's go. I mean, if I get this, I'm going to be getting a ring on the way up, and I don't want that, right? So that's why I'm putting this down below. And then once it hits up, I'm going to be looking for this retracement and then a continuation upwards, and then reanalyze where's my dynamic reactor. So far, that's what I got on altcoins. I don't want to overload you guys, but we have already gone through, I think, 3, 6, 7, 8, 9 different altcoins today. So you have where to choose.
I like it. I like it. I was just looking through Into The Cryptoverse because he's got a whole macro section in here. He does not have anything. He's got a ton of stuff on macro. I'll pull it over here real fast, but there's nothing in here on labor force recession. So he's missing out. He's missing out. He needs to have that in there. He needs to go get those metrics and start building that into his stuff. I'm gonna have to email him. I'm gonna have to go, Ben, why are you not tracking labor recessions? So, guys, that's all we got time for today. We're about to head over to Crypto Coin Mindset. Keith over there. Appreciate you guys all being here today. Update on the puppy. 100% recovery. She's doing great. We're actually going to see a new vet tomorrow. So no longer using the other vet that kept giving her Cyto point injections. So doing better on that. Yep. And then also, guys, don't forget, check out BC Port Corp in the morning doing his morning show. Good Morning Crypto right here. And then also OC guy doing trade setups with the OC dude every day at 8 p.m. Eastern Standard Time, just like you guys just saw with those alts. He's ripping through, showing you guys how, hey, look, take a fresh, clean chart. This is what you do. This is what you put there. This is how you look for support and resistance. This is where I would enter. This is the why of it all. I will remind everyone, we are sitting right now, average 8 days of government close. I don't know if this one's going to be that long. Obviously, I don't know everything. But 8 days would put us into next Tuesday. And don't forget, next Tuesday is the bullish moon. So if you don't know what that is, show you here real fast before we head over. Bullish moon. Look, bullish moon, upside there. Bullish moon, upside. Bull moons typically lead to very bullish price action, and that will be, the next one will be on Tuesday, October 7th. So 51% move to the upside, $167,000 Bitcoin. OC, would it not be hilarious if the guy who was Pie Bear a lot of times this season was also the guy that was within 1 or 2% of calling the top at the beginning of the cycle. Just saying. Well, just saying, just saying. All right, guys, that's all we got time for today. We're going to be heading over to Crypto Coin Mindset. Keith and T.I. Joe are over there waiting on us right now. So we'll catch you guys tomorrow morning, 10 a.m. Eastern Standard Time, bringing you guys the news, the charts, the markets, the headlines, the is the government open answer, everything you need to have knowledge unless the BLS doesn't put it out because the government's shut down. Until next time, guys, trade safe, use some risk management, peace, love, profits. Be kind to yourself, be kind to others, and always be kind to Alexandra G. Later, guys.
That's the rap. Chart stack data never lie. Piper led the mission, OC in the sky. Spaghetti on the screen, but the vision stay prime. Chart prime visual, signals on time. Alumni strong, we built from the grind. Lessons in the market that'll outlive time. Knowledge is profit, you know how we run. Till the next one, stay sharp, get it done.
You can't handle the truth. Emotional damage.
We'll see you at the next
Don't
one.
know what the fuck they're doing.
Morning market report out. Out. Out.
Boom shakalaka.
We'll see you at the next one. Morning market report out. We'll see you at the next one. Morning market report. Ow.
That was awesome, dude.
Hey, it didn't break. What else you got?